Time for another stock review. This time we are talking VICI Properties. I'm going to share with you a full back test. I'm going to share with you all the numbers, who's buying on the inside, who's selling on the inside. Can you make money from this stock? We're going to crunch the numbers. I'm going to show you the inside trading, the balance sheet, the profit, the loss, give you a solvency score, a profitability score. We're going to also look at the back test compared to the S&P. We're going to look at the dividend history. People buy this stock for the dividend interest. What is VICI? We're going to look at what it is. We're going to compare the dividends. We're going to compare the back test, breaking news, all of that on this show right now. This is made during a live video, so people are watching. They can say anything during the live video if they want to talk about it, promote it, ask me questions. Any of that can happen. Smash the like button or the down like button if you don't like my content. I use the most advanced algorithmic software. I don't get paid to do this. I don't get sponsored to do this. This is me just doing reviews based upon facts and numbers alone. That's why all my reviews make their way onto AlphaSpread, probably the most advanced AI software platform in the world. Above Bloomberg, CNBC, they handpick those. With my reviews, they post them all. And if you look below in the description of this video, or wait until I give you a link above my head, I will give you a discount code so you can go and get my software that I use for free, or my members can get a discount, which basically makes my membership completely free. So what is this? Now, full disclosure, I do not own any stocks at all. I only own the S&P. I'm fully invested. I'm here to build the most honest YouTube TV channel and Rumble channel in the world. I'm not here to get you to subscribe or watch the videos at all. I'm building the most honest audience in the world, and the subscribers and the growth will come naturally. I'm focusing on you, not trying to pump the stock or give you a load of nonsense to get everyone excited. That's not what we do here. If you want that, go and watch CNBC, go and watch Jim Cramer. That's not what this channel is about. So what is VIC Properties? Tap the like button and share this video out if you like it. As you can see, we've had a bit of volatility here over the time. As you can see in 2020, COVID, it crashed down and it's now moving back up again. There is some volatility here, but it's all about the dividend of this company. So what is it? Let's go into some detail. VIC Properties is a real estate investment trust which owns and acquires and develops gaming, hospitality, and entertainment properties. It operates through the following segments. Now, I know a bit about this because I've done a show in Vegas. Oh yes, called One Night in Vegas, my own show. I staged in Vegas at one point. So go and check that out. Martyn Lucas on my music channel. The links are below this video, and you can go and check out my music channel and see my showgirls when I performed in Vegas. Real property business and golf course businesses. The real property business segment consists of leased real property. The golf course business segment consists of 4 golf courses. The company was founded in July 2016 and is headquartered in New York. The listed name of the company is VICI, V-I-C-E. Now, I would love to speak to Edward Pitoniak. I hope I've pronounced that correctly. We have a Meet the CEO series. So if you're watching, if your company are watching, as they do, or the investors are watching and they want to contact investor relations, email or through social media, please do. My army do that, and they use the hashtag Lucasades, so you'll know they're doing it, which LUCASADES. And the idea is they'll go to you and invite you onto the show so you can talk to me about your company. And I rank for the word stock, let alone VICI stock, VICI stock. So I'd love to share to the world all about your company, give you a voice here on the channel. And if the investors would like to do that, please go ahead and do that. And I'm sure we'll have them on the show and learn more about this company. 23 employees, very small company, headquartered in New York, founded in 2016. Margin requirement is very, very low on the stock, 25%, so it's regarded as low risk. We look at the market cap, it's 30.42 billion, 52-week high 34.90, 52-week low 26.63. Dividend yield is 5.43. Okay, but now some people, let me talk about dividend stocks in a moment. I'm going to say that why you'd buy a dividend stock as opposed to a growth stock, and does it make sense? We'll cover that when we get to the dividend section of this video. Average volume 6.27, not massive amounts of volume on this stock. Let's scroll on down. Now, a Morningstar, who I don't use as investment advice because they're paid and influenced, they say it's a strong buy at 88%. Great, no one's selling it. The stock price is the earnings kind of go sideways. That means we have a company that's not growing. It's just going sideways, but it is earning consistent and making profits consistently. Okay, who are we in bed with? Who else buys this stock? What do they invest in? Well, realty income. We've talked about that on the show. We're familiar with that. Not familiar with Schwab. I haven't looked at that. Stag Industrial. None of these I've actually looked at. So I can only speak of realty income. And I'm going to save the dividend little bit of information to the dividend section of the video. So we'll be there in a few moments. So bear with us and we'll cover the dividend information. Right. Let's now go and look at the company and see what it's all about. Let's go and study the stock. Let's get in the boardroom, look at the numbers and decide whether it's right to buy this stock or not. Let's get straight into it. And let's start by looking at the website. This is the website, Caesars Palace. And as I say, I've been to Vegas and I put a show on there as well. And the Plaza I entertained, and you can find it on YouTube. And I got my Vegas showgirls and everything. So I'm a bit familiar with this. If we just zoom in and see what they're saying about the company before I bring you some recent news. VICI Properties is a real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality, and entertainment destinations, including Caesars Palace, Las Vegas, MGM Grand. I've been there as well. That was entertaining, watching David Copperfield, and the Venetian Resort of Las Vegas. Three of the most iconic entertainment facilities on the Las Vegas Strip. VICI Properties owns 93 exceptional assets across a geographically diverse portfolio consisting of 54 gaming properties and 39 non-gaming experiential properties across the United States and Canada. The portfolio is comprised of approximately 127 million square feet and features approximately 60,300 hotel rooms and over 500 restaurants, bars, nightclubs, and sports books. Okay. Excellent. Now then, some recent news just out just a couple of days ago. VICI Properties announces partnership with Homefield, Kansas City, and youth sports recreation campus and Margaritaville Resort. An experiential, I do apologize, I'm struggling this morning. Experiential real estate investment trust announced today that the company has entered into a construction loan agreement for up to $105 million in financing to affiliates of Homefield, Kansas City, to fund the development of a Margaritaville resort in Kansas City, Kansas. The construction loan has an initial term of 3 years with a 12-month extension options subject to certain conditions. Okay, some breaking news there on the company. Now let's go into the numbers. At the end of the day, if the numbers don't make sense, you can't make money. And how does it all stack up? Let's look at it right now. Let's go into the numbers and decide whether it's the right time for you to buy the stock or not. Okay, here we go. The first thing that we want to do is look at the intrinsic value, but that in itself is not enough. Have you tapped the like button yet? Have you shared the video? Have you helped me out? Have you left a comment below? And of course, I will reply to all the comments on YouTube, and I will reply to all of my members. So please do respond below in the comments. VICI, 39.77, undervaluation, 26%, base case. So it's undervalued at the moment. However, we need to look at it. Best case scenario, 56% undervalued. Worst case scenario, it's still undervalued at 6%. Are there any warnings? Yes, there are. I would have thought there would be. Possible trap Value trap detected. A value trap occurs when a stock appears inexpensive based on fundamental analysis, but fails to reach its intrinsic value over time, often due to underlying issues not reflected in the quantitative data. Remember, we're all about numbers here, not influence. People, pay me to say great stuff, just numbers. Scrutinize beyond numbers, assess long-term potential. Very important to understand what is and what isn't intrinsic value. You need to understand that, and that's why I'm explaining it here. Okay, so we'll move on. And the most important part is the dividend, of course, and we'll come on to that in a minute. The revenue, financials. Now, moving up nicely, 5% on the most recent range. That's good. Expecting it to slowly rise, which is nice because the stock's kind of going sideways. Expecting it to rise. Operating income going up 10% and expecting it to rise steadily. This is good though. Net income up 11% and expecting to rise steadily. Free cash flow is down 22% from the most recent range, but we are making 1.2 billion. There is cash flow, just down from the most recent range. Capital expenditure up 72% over the most recent range, but a lot less than past history of 22. We are spending less on the company. Operating cash flow up 2% on the most recent range. Let's look at the balance sheet. At the end of the day, the balance sheet has to look good. If the balance sheet doesn't make any sense, then the company doesn't make any sense. So let's now look at the balance sheet and see if the numbers make sense. We don't want more liabilities than there are assets. We don't want too much debt, and we also will want to see some cash on the books as well. 42.8 billion in assets and 18 in liabilities. That's good so far. Cash, $500 million, 511 million in cash. That's good. Not a huge amount of cash though to our assets, but that would make sense with this company. Liabilities, we have got long-term debt, 17.5 billion of debt. Huge amount of debt, 93.7. That is the most debt I've ever seen on a balance sheet of all the stocks I've reviewed, and I must have reviewed at least 80 stocks now. I've never seen basically all the liabilities is debt. Well, that would make sense on this company, right? Because if they are acquiring properties, they're just mortgaging themselves, and maybe that's okay. Maybe that sort of business can substantiate that sort of debt. Another style of company perhaps can't. This company probably feels that it can borrow money at cheap enough rates to make profit on it, and it just holds the debt. Remember, a lot of people make money by just simply holding debt because the money they borrow makes them more money, so they just hold the debt. That does happen, and a property company like this needs to be looked at differently than to a tech company or a car company or automotive company or whatever. Anyway, so they do have a lot of debt. However, their assets, their properties far exceeds their debt. Okay, so let's see how that equates to a profitability score and a solvency score. This will be interesting. So let's first of all look at the margins. Margins are fantastic, 99% margins, making a lot of money, hence why they're keeping the debt. They buy properties, they make money from whatever it might be, and their margins are very high, so they can afford to keep the debt, right? Gross margin, 99%, operating margin, 91%, net margin, 69%, FCF margins are 35%, ROCE, 8%. You get the idea. This company is printing money, okay? Let's look at the profitability score. As you can see here, 60%. Exceptional gross profit, positive gross profit, positive operating income, positive net income. Their profitability is 60. Now they're 34%. Long-term solvency is good. Short-term solvency looks negative, doesn't look so good, but we understand how this business works. It's not like a tech or automotive company. So their solvency is 34. They're holding debt, but they can afford to hold debt. Another company with that amount of debt would have had a solvency score of 1. 1%, 34. It's not an 80% like an Apple or an Amazon, but they need to be there because they can't borrow those sorts of amounts of money. Whereas this is different, right? 34% is not a great score, but it's not a bad score. The business clearly isn't going bankrupt. It just gives you an indication of the amount of debt they are holding. All right, Wall Street Analysis, they're giving it a 24% upside. So compared to the S&P, around about 12% with inflation, it's double that. Best case scenario, 53%, looks pretty good. All right, what about the lowest level, 10%, just below the S&P. So that's okay. We can live with that. Competition, I'll give you a link in a minute where you can go to the competition and see what their balance sheets look like before you invest, see what their dividend payments look like, and you can compare. And I'll give you the link above my head or it's below it in the description in a minute. Now then, ownership. No one's buying or selling the stock. No one's buying or selling a single share of the company. Nothing happening at all. In fact, there was a very small transaction. It's so small, it doesn't even register. The last transaction was on March the 8th, 2022, nearly a year ago, by Rumble's Michael D, who bought 100,000 shares. So actually, we've actually had some buying, but it's so small we can't see it. So we've had some buying. No one selling at all. Okay, let's scroll on down and short interest. Well, 2.37, a bit of short interest. Nothing that's going to do a short squeeze. Nothing that's going to really impact it at all. Just a little bit of short interest because, people always bet on the direction of the stock. I never short a stock. I never do options. And in fact, I don't even own any company other than the S&P, so I can be impartial and not to be seen as a pump and dump channel. I'm here to provide information. That is it. All right, and entertainment, okay? Last 90 days, all positive news. Only 4% negative. Last 30 days, only 4% negative. Last 7 days, all positive. Today, no news as of yet. All right, now then, you might be buying this stock for the dividends. That's why anyone would buy this sort of stock. So if you've got a portfolio where perhaps you've made your growth in your early years, you took lots of gambles and risks earlier on in your life, and you've built up a nice big pot of cash, you now move into dividend stocks without really any risk, with a good dividend king. Is this a dividend king? We'll establish that in a moment, where you're getting passive income. Now, if you've bought it through your Roth IRA or in the UK and ISA, then you're not going to pay tax on that income. That's free, tax-free income. That's what you want, right? So you should be buying this on your Roth or your ISA account. But you've had to build up enough to earn enough on dividends to be able to live on. So you've got to, through the years, have a growth stock. Now, if you've got a stock that's got growth and dividends, you've got the best of both worlds. However, a stock with a high dividend is more than likely to have a sideways growth or a negative growth. And you have to work out how much is it worth it. So if the stock was continually going down but paying you a dividend, would that just balance it out, or would you still be up? What if the stock's going up and you're getting a dividend, but the dividend isn't always getting paid out? It's unreliable. Sometimes it's more, sometimes it's less. You have to work all these things out to decide whether it's good or not. Now, we can see over the period of time from 2018, that is, we have had a gain of 40%. So, of course, just the growth would be way below the S&P. There'd be no point, right? If there was no dividends here, you'd have a gain of 40% over since 2018. You'd be way below the S&P, so there'd be no point. But I'm going to show you now the dividend payout history and a back test against the S&P where all the dividends were reinvested. Now, I always advise people, this is not financial advice, of course, but not to automatically reinvest dividends. It's a lazy way of doing it. If you automatically reinvest dividends, it stops you spending it on something else, going down the pub. At least you are constantly reinvesting, so you're constantly going to get more money. However, if you just have it in your cash, wait for a dip, and then buy it manually, you get a better deal. Or maybe you put it into something else that maybe is down at the time. All right? So reinvesting dividends is great, but do it manually, not passively, just turning it on and sleeping on the beach. But maybe you're so rich you don't care, you don't even want to bother, and then you just let it do its thing, and that's fine too. At least you're staying in. Right, so let's now go and look at the dividend history and see if it is a dividend king, and then see how it compares to the S&P. So let's now go and crunch those numbers. Are you ready? See if it makes sense. Put our finger on the pulse and see if we can return ourselves a decent profit. Have you tapped the like button? Have you subscribed? Have you done all those wonderful things? Hopefully you have. Let's go straight then into the dividends. Now then, 2018. They paid out 16 cents. It then went to 26. Nice jump. 28, 28, 28, 28, 29, 29. 29 is paying out. It's paying out 33, 33. We've not missed 33, 36. Good. 36, 36, 39, 39, 39. I feel like an auctioneer. Gone, and that's sold. Excuse me. Couldn't resist it. Couldn't resist it. All right, there's a little clip there for anybody. Pick up that clip there for the Oscars thing. Anyway, people watching me live know what I mean. 39. We then went to 41, 41. So all looking good. The next payout will be in April of 24, and it's consistently paid out. It's consistently gone up. It cannot qualify for a dividend king like J&J and Coca-Cola yet because it hasn't been doing it long enough, but it's starting along the right trend anyway. So that's very, very good. Now look at the back test. From 2018 to today, as you can see, VICI Properties was affected more with COVID than the S&P in blue. Makes perfect sense, because they got shut down, whereas the S&P got shut down, but there were still things doing business, right? So the S&P, took the brunt a lot better than this would have done. That makes perfect sense. But then, of course, it came back quicker as things opened up. We can see that. So at the end of the day, though, all through those macro conditions, we're up 1 minute, we're down the next minute. Since 2018 to where we are today, we're pretty much identical. The S&P would have returned you 20,000, and the VIC would have returned you 20,500. So virtually identical, and that is with reinvesting the dividends. Because if we hadn't have reinvested the dividends, we'd have been way down. But we have had those dividends. Now we may have made more money by manually investing on the dips, or taking our dividends and putting it somewhere else that was even worse, and even cheaper and even better value. So there is a way where we could actually improve on the S&P further. Okay, but of course you can do the same thing with the S&P. You could take your dividends and manually find something better to buy. All right, so anyway, it compares pretty well. So let me give a final review on this stock. Would you buy this? Well, it's certainly a buy. There's no doubt about it. It performs like the S&P. It's a solid company. It has a lot of debt, but we've explained why this industry can operate like that. A lot of people who buy houses and businesses just forever hold their debt. They never pay it off because they make more money holding the cash rather than paying off those debts. So is it a buy from me? Yes. It is a buy from me. I'd be looking at catching it on a dip whenever you can. The dividends are reliable. The dividends pay out, no doubt about that. But of course, I don't own it. I only own the S&P, and you could do just as well with the S&P anyway. So is it worth buying? Well, there's potentially more explosive stocks with AI because the S&P is heavy weighted towards technology over the next 10, 15 years. So perhaps there's more potential in the S&P going forward, but it's horses for courses. Maybe you put half your money on S&P, half your money in there. I don't know. You can do whatever you like. And I don't know, but this company is probably part of the S&P anyway. I don't know. I've not looked at that. Anyway, so there you go. Click above my head for all the links if you want to use my software. All my members can use it for free, or you can get the discount code as well below here in the description, martynlucas.com/links. All my links also below in the description and above my head. If you want it for free, you can. If you use the premium plan, I get a small commission, one-time payment. Doesn't cost you anything. It's the same price for you, but that's the only time I ever make any money out of these reviews. Alpha Spread don't pay me. They don't give me any money to do the reviews. I do them all just because I want to. And if you do have the free plan, I don't get anything anyway. All right, over here, more reviews. I've got many, many reviews of companies and stocks. If you are a member of my channel and you want a review, I'll make one for you. But that's it from me. Thank you very much indeed. Until next time, as always, take care of yourselves. Oh, by the way, I've got a little link down here somewhere. I think it's just about here. Just about here. It's my music channel. Join me. I'm the World Piano Man. Every Friday night, I do live concerts and special tribute shows for you if you want special live events. Go and check out my music channel. It's just about here. Till next time, as always, take care of yourselves and each other.